Whether you're new to trading or you've been trading for a while, you've probably heard of moving averages, and this is one of the indicators that you can use to understand how the market is moving, what is the trend, and overall what you can do to make money in the stock market, because this is why we're all in it. If you're new to this channel, welcome. And here we talk about the stock market, business strategies, and money management for your personal finances. If this is something that is of interest to you, I would ask you to please go ahead and subscribe and hit the like button for this video, because this will help me out a lot. So now onto the video. Moving averages, what are they? So simply put, moving averages are simply, as the name sounds, the average price of a stock. So basically what you're looking at is the average price of a stock over a specific time frame. So at its simplest form, this is what it is. And as such, you can use it to look at the 10, 20 days, 50 days, 100 days, or 200 days time frame. And you would be able to see how the price has been moving. Has it been going up or has it been going down? The fact that it looks at the past price data, that makes it a lagging indicator. Although you can use it to make a forecast, use it as a prediction of where the market could go, but overall, it is a lagging indicator because it will only provide you information onto what has happened in the market, but not what is happening and what will happen. There are many types of moving average, but the most used, or the most that you will see around, are the simple moving average, or the SMA, and the exponential moving average, also known as the EMA. So what is the difference between the two? The SMA takes into account the sum of the past closing prices of a specific time frame. So if you are looking at the 20 moving average, so it will take into account the sum of the past 20 candles. So as such, it gives the same weight as all of the candles at the present, regardless of the trend that is currently happening in the market. This is an issue for many traders, because if you had a stock that was trading probably 20 cents a day, and now the stock is moving 40-50 cents, so this is a big move and this is different. And so to solve this issue, exponential moving average does that. So what it does is that it gives more weight on the recent data. So because of that, it is more responsive to the price action, and that makes it a little bit more volatile. So if you're trading, either day trading or swing trading, and you are looking at a data to make a decision that is reflective of the current trend, you would most likely use the EMA instead of the SMA, because it is more responsive to the stock market as it is happening now. But now, how can you use that information when you are trading? The first way that you can use it is as a trend indicator, by comparing the price and moving averages. So the first example, if we have a price that is moving, that was moving, let's say it was going down, and then for some reason you started to go sideways and up. If you have a moving average that is following the movement of those candles, given that the stock was going down, a moving average would be following here from the downtrend and then start to turn around as the stock is moving. So once you start doing this move up, and let's say that you had a big push here, most likely you would see the moving average, the price crossing it up here. So whenever you have that cross over there, and that cross here, and then the price is above the moving average, this would be an indication that the trend is reversing and that you are going into an uptrend. This is what the uptrend would look like as the price keep going up. And if the price were to go and cross it down also, then you would have that move here that would indicate a downtrend. So as your price crosses above the moving average that is an uptrend, and as the price crosses below the moving average, that is a downtrend. You can also compare the moving averages. So let's say, for example, we have a stock that is moving within a specific time period. Let's say we are looking at a daily chart. So if we had a downtrend, and let's say that this is a 50 EMA, and the red is going to be a 20. So if you had the 50 EMA moving this way, so the indication of a changing trend when you are looking at moving average is the short term moving average, how it crosses the long term moving average. So if you have a 50 EMA moving in that fashion, you have the 20 EMA. Once the EMA crosses below the 50 EMA, then you have a downtrend. Now if you have the short term moving average, which is the 20 in this case, that is still moving, going above it, then now the trend would be reversed into an uptrend. And then if you go and then you continue and then it crosses below it, you are again into a downtrend. Now we have to remember that the stocks is either moving sideways, up, sideways, or down. So the moving averages will always follow that, and you can use them as they crosses each other to know exactly if you're in an uptrend or a downtrend. Now if you're using the moving averages for your trading, these are the most commonly used time frames. You have the 200 days, which is basically a year, which is 12 months, 100 days, 6 months, 50 days is 3 months, 20 days is 1 month, and 10 days is 2 weeks. Although these are saying days, if you can also use these values for a shorter time frame, such as the hourly or the minute charts. But just know that if you're using the 10 EMA or SMA, then these are simply referencing the last 10 candles. Alright, and so let's take a look at some charts and some example and how you can use them. Okay, so here I have the most current charts for Facebook. So this is Thinkorswim, and the way that you would add moving average is you would go to studies, and then here you would either type simple moving average if you're using simple, or exponential moving average if you are using exponential. I like to use exponential, so I would do this. Now I'm gonna use all of them so you can see exactly, and this is how you would modify them. So this would be the 9 moving average. They start at 9, but we're gonna say 10, and this is where you would change the color. Next up, you would go here for 20. I'm gonna leave it at blue, and this is gonna be 50. Gonna change it, give it a different color. With the white, so it can stand out, because the 50 EMA is one of the moving averages that a lot of traders look at. Usually, if the price crosses below it, or they can look at it as a support or a resistance level in the chart. So if we're gonna make it stand out, we can use that. The next one is going to be 100. Give it a different color too. We'll do yellow. And then the 200. Do it green. And then you click apply, And there you go. So looking at the daily chart of Facebook, so here is the 200, this is the 100, and this is the 50, this is 20, and this is the 10. Now one of the things that I like to do also, that you can do for the 50 to stand out a little bit more because of the size, you can change the width here, make it 2, and hit apply. A little bit bigger here so we can identify it more. So as you can see on the daily chart, these two, the 200 and 100, are the slowest to move. Again, this is like a year and 6 months value, so they would be the slowest. Although you can use them here and look at them here, as the price went down and hit the 200 EMA, it served as a support and the price bounced up. So again, they do have their use, specifically if you are doing a longer term trade. But the most that are going to be moving faster are going to be the 10, the 20, and the 50. So as such, just to indicate the trends, I'm going to take out the 100 and the 200 so we can see the others. All right. So if you are looking at the chart here, you had an uptrend at this point, and then the moving averages crossed down because the price went below it. The price went below it first, and then followed the moving average crossing the 10 moving average, crossing down on the 20 moving average, and then the prices went a little bit up, crossed here, and then falling down on a strong downtrend. Again, this period here was to be expected because it was during the beginning of the COVID-19 period. But going forward, what do you see? You hit the low here, and the moving averages are really diverging, and you keep going there. So the way that I like to look at it first is the price crossing the moving averages, and then the moving averages, the short-term moving average crossing the long-term moving average. So I use that as for the trend indicator. So here you would have the stock crossing the 10 EMA, indicating a possible uptrend, and then I would wait here for a confirmation for the 10 EMA crossing the 20, and then here you have that confirmation here at this point. And then if you can say also like a second confirmation point would be if the price would move above the 50 EMA, because at this point, looking at this chart here, the 50 EMA could also serve as a resistance level. And if the price crosses above it and goes on to this point and holds, so now you have the price above 3 moving averages, and the short-term moving average already crossed the long-term moving average. So this could have been a good entry point for a swing trade if you were doing that. And going here, what do we see? The price kept going up, stayed above the moving averages, and both short-term moving averages, the 10 and the 20, crossed the longer-term 50 moving average, and the price only kept going up from this point on. And here again, price crosses down, moving average crosses down afterwards. So this is a downtrend, and you go up like this. Now going forward, we can also use that in a different time frame. So if this is the 4-hour time frame, we can use it. We can see it doing the same thing. Price crosses down and moving average follows. You could use it on a minute time frame to see how it was trading today. The stock was done trading today. it was a strong downtrend. Market sold off, price went above it, and then the 10 crossed above the 20. So that's a signal, that's an entry signal here. The price kept going here, fell down, and then went up again, and then continued to fall down. And here you can see the 50 serving as a resistance level. Although the candles went and crossed the moving averages, the 10 and 20 moving averages, the 50 served as a resistance and kept doing so until it reached that point here. So this is basically what the moving averages are and how you can use them in a chart to make a trading decisions. Again, they will not be the only factor that you would be looking at to make a trading decisions. I would strongly advise against it because many other factors can affect how the price is moving. But on technical analysis, they can be a very powerful tool and can give you a strong information into what is happening in the stock market and where the trend might be leading, and also helping you in taking a better decision when trading. So thank you very much for your time and for watching this video. I hope that you found information that was valuable, and I would ask you to please hit the like button, leave me a comment below if there's something specific that you'd like for me to talk about, and please do not forget to subscribe to this channel. I will be putting out more videos to help you trade, and also that can provide valuable information and to how business operates, and that can be of value to you. Thank you very much for your time, and I will see you in the next video.